I believe we have something between 4 to 7 months until we have the final financial crisis, which will lead to the final round of money printing, which will lead, in my opinion, to the end game. I could be wrong. I have been wrong before. I am not a prophet and I am not a genius. I am just looking at logical patterns and charts and seeing what is running out, what tanks running out, and how much time we may have left. Gold and silver are going to go up in a way that they've never have in history, meaning the dollar is going to go down very fast and is going to bankrupt most of the world, except for people that have a stack of real money.
As we transition through the final quarter of 2023, the list of known risk factors is expanding as an unrelenting sell-off in government bonds has sent global treasury yields to levels last seen prior to the global financial crisis in 2008. Rafi Farber, a prominent financial analyst, provides insights into the current economy and anticipates an impending financial crisis in the coming months, along with a final phase of money printing. Regarding gold and silver, Farber advises holding both for wealth preservation and retail purposes, anticipating their increasing importance in the near future. Although the bears have been able to break through the 6-month gold floor at $1,900, rising energy prices coupled with slower economic growth are creating a stagflationary environment which will eventually push gold futures back above $2,000 an ounce. Gold Silver posted on its Twitter, analysts are expecting a 142.1 million ounce silver deficit in 2023, the second largest deficit in more than 20 years. Rafi highlights Fortuna Silver Mines' third quarter of 2023 record gold production and expresses his belief that gold and silver mining companies are undervalued in relation to precious metal prices. Gold and silver production for the quarter was 94,821 ounces and 1.7 million ounces, respectively, or 128,671 gold equivalent ounces won, including lead and zinc byproducts. Furthermore, Rafi also warns of potential short-term declines in precious metal values as the anticipated financial crisis approaches. Now, we are presenting Rafi Farber's insights clips from his recent video with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I have seen these movements in gold and silver before. I've seen the dismal price action, and price action like this usually leads to a financial crisis or precedes it. And so, yeah, we're going to talk about timing today. Something between 4 to 7 months, could even be earlier than that. So be ready however you get ready, whether it's by stacking or by owning mining stocks, or whether it's by stacking food or protection or moving out into the country. You've got to be careful. We're at the end of this, I believe, and don't have that much longer to go. In the meantime, we're going to get some good bargains on gold and silver and mining stocks. Buying low and selling high, it's a terrifying thing. It is. It's not easy. If it were easy, everyone would be rich selling and trading stocks, but it is not for these specific reasons. Because we say to ourselves, why isn't gold and silver going up? But trust me, believe me, and I do not give advice, and I could be wrong, of course, but when the Fed turns around and prints trillions of dollars in response to the next banking crisis because of what is going on in the housing market and interest rates, gold and silver are going to go up in a way that they've never have in history, meaning the dollar is going to go down very fast and is going to bankrupt most of the world, except for people that have a stack of real money, whether that is gold for wealth stability or is silver as the public's money for emergency retail purposes. I believe you need both, and you will see why in the next few months. On October 5th, news out of Vancouver, Fortuna Silver Mines reports record gold and gold equivalent production for the third quarter of 2023 from its 5 operating mines in West Africa and Latin America. Gold and silver production for the quarter was 94,821 ounces and 1.7 million ounces, respectively, or 128,671 gold equivalent ounces. This is a record for the company. We can see how they are operating wisely and efficiently despite the negative market conditions. And the general case for gold and silver miners right now is that they are the most oversold, underpriced relative to the gold and silver prices. You're not going to get deals like this for much longer. Could it go lower? Could the stock go lower? Could gold and silver go lower for here? Yes. it could temporarily as the final financial crisis approaches. That is, I believe, where we are. And it is time to make your decisions and decide what you really believe.
Farber points out that while homeowners benefit from their low mortgage rates, it is the banks that originally issued these mortgages that are being negatively impacted. These banks initially lent money at much lower interest rates, like 0.5%, 1%, 1.5%, or 3%, and now they are receiving less income compared to what they could potentially earn in the current market. Recent spikes in mortgage rates have caused some borrowers to turn to home loans such as adjustable rate mortgages, which can have lower interest rates at the beginning but increase later, though those loans are different from the predatory mortgages sold during the financial crisis. He predicts that this could eventually lead to a banking crisis when the reverse repo tank rate rises and banks run out of excess dollars. When this happens, banks may struggle to meet their high interest rate debt obligations, or their clients might need to withdraw funds from their accounts to cover their own debts. This could result in a serious dollar crisis, forcing central banks to engage in additional rounds of money printing. Let's get back to the interview.
Reverse repos, there's a lot of fancy names to refer to these things, but it's basically a whole bunch of money was printed, not money, but dollars. A whole bunch of dollars were printed in 2020 and 2021. The banks couldn't handle about 2.2 trillion, or maybe 2.5 trillion. They couldn't handle all of this cash being sucked into their bank accounts. They couldn't handle all of the overflow because it does cost money to manage money in a bank account. So all of the extra money they had to give back to the Fed, and the Fed gave them interest on it because otherwise they just have to stick it somewhere in the economy and cause severe consumer price inflation. So the Fed didn't want them to do that. So they gave them a reverse repo facility where they could stash the cash temporarily overnight, and the Fed would give them interest, and they could keep doing this over and over and over and over again. And this is why the Federal Reserve is in perpetual losses now. And I think they have topped $177 billion in confirmed realized losses. The unrealized losses of the Federal Reserve are much higher. I think they are over $1 trillion now. But anyway, this is the weekly change in reverse repos. This is the dollar reserve tank, and we're going to get into the exact amount of it a few slides from now. I think it's at 1.26 trillion or something like that, but we'll see the real number in a second. So this is the weekly move, end of week move. So this is the worst week. I mean, not the worst, but the week that it descends or it falls the most since October of 2021, since 2 years ago. So the title here is wrong. It's not in 2 years. It's not in a year. It's in 2 years. So this is the worst, the biggest drawdown from reverse repos in the dollar reserve tank in 2 years. Now, why is that happening? Let's go to the next chart. I believe one of the factors that it is happening is rising interest rates, and interest rates rose like crazy this past week. I think the TLT 20-year bond plus futures ETF, 20-year bond ETF, not futures, the volume on that ETF was the most ever. The weekly volume was the most ever. This thing is being dumped across the board. And as interest rates rise, you have unrealized losses in banks. When you have unrealized losses in banks, that frees up balance sheet space. And so they take money out of the reverse repo account and they put it back into their balance sheet to use that freed up space because they don't want to show all these losses directly. They'll have to show them. They're not going to be able to hide them. But I think the money that is going back into reverse repos every day, less of it is going back, and it's just staying at the banks now that they have so much losses on their balance sheets, they can afford to hold that money directly in the banking system rather than in the reverse repo. I think a fixed rate mortgage here in Israel is like 11 or 12% now. Well, I have a much lower rate than that. Why would I sell? I'm not going to sell. Most people are in that same situation where they don't want to sell. So the inventory is low. The prices are remaining stable because people are staking where they are. But who bleeds when this happens? Well, the bank who sold that mortgage, that 30-year mortgage at what? 0.5%, 1%, 1.5%, 3%, whatever it was. They are getting much less money now from then than they could now. So the fact that people are paying those mortgages are hurting the banks themselves. So we're going to head into a banking crisis because people are paying their mortgages and not selling, not because they're not. So when does this happen? When does this banking crisis happen? Well, I think it's when the reverse repo tank dries up and the banks run out of extra dollars to use, and there's a dollar crisis and they need to pay their debts. They need to pay their high interest rate debt, or one of their clients does, and they take money out of the bank account in order to pay their high interest rate debt, and we end up with a serious dollar crisis that leads to the final round of printing. This is only a matter of time. I believe it is months away, and I believe it will hit when the reverse repo tank falls to zero somewhere between February and April of next year. It could happen beforehand.
The global economy is becoming more uncertain, with fears of a financial crisis due to bond sell-offs and excessive money printing. Expect short-term fluctuations as we near the crisis, highlighting the importance of a diversified financial strategy in these uncertain times. What are your thoughts on the current economic uncertainties? Share your thoughts in the comment section below. If you find this video informative, don't forget to your support towards our channel and turn on notifications to stay informed about our latest videos. See you in the next video.